Today, we're going to talk about kind of a big potential shift in the retirement landscape, specifically in your 401k plans that I'm pretty excited about. But of course, there's no free lunch in the investment world, and we have to think about some of the risks that are associated with this. So recently, the Trump administration opened up the door for alternative investments to be available in our 401k plans. Now, if you worked in the Traverse City office, you'd be hearing me talk about alternative investments for the last couple of years. This is a massive growing investment area, and it's a huge area. So what are alternative investments? Well, this is going to be things like private equity, private credit, could be cryptocurrencies. It could be our what we call derivative contracts. So things like options to generate income or future contracts to get some leverage. Again, massive world that we're talking about here. And this is now going to start to be available inside our 401k plans. This has traditionally been available to more of like our institutional investors or sort of the ultra wealthy or accredited investors. Now, this is a change I anticipate that's going to go slow. You know, when you think about 401k plans, there's some base rules out there, and now this door is open. It's going to be up to your specific company and your plan administrator to make these options available to you. Now, when you're looking at any investments in 401k plans, they tend to be more in the conservative end of things just because any company wants to make sure they have their compliance kind of ducks in a row. But this could be changing over time, and I envision these will be options that are going to be available to you. So what is the idea behind alternative investments? Well, the idea behind these is, again, just to add more diversification to your portfolio. And anytime we can have more diversification, I'm going to be a fan of that. When we look at alternative investments specifically, these tend to have a little bit lower correlation to the stock and bond market. A lot of these alternative investments aren't publicly traded types of investment opportunities, so they don't necessarily move and tango with what the stock market doing or what the bond market's doing. That said, and especially in the case of like cryptocurrency, they tend to have maybe a little bit higher level of volatility, but they can improve our potential return or income piece of our portfolio versus our traditional stock, bond, mutual funds that we have. Now, all that sounds great. What are some of the cons to these? Well, the alternative investment piece tends to be a little bit higher in cost. It's going to be interesting to see how these plan administrators make these options available to you inside of the plans. Traditionally, if you're looking at like mutual funds for alternative investments, I've seen some as high as 5% internal cost. So we have to be careful with that. If we're investing for 20, 30 years, a 5% fee is going to really drag our portfolio returns down. They also tend to have a little bit more limited liquidity. Again, not sure exactly how this is going to be rolled out, but in the traditional sense, if we're looking at like an interval fund for alternative investments, a lot of these funds only offer liquidity on a quarterly basis. So if we're retired and we're putting money into all these alternative investments and we're taking income out of it, we have to be aware that we may not be able to take as much income from this piece of the portfolio. And a lot of 401k plans, when you're taking distributions, just kind of sell things pro rata. So this might skew the allocation over time as you're taking income out of them. The other piece is there's a lot less transparency. When I meet with individuals from the TV show or that come from our dinner events and we talk about, their large cap growth stock fund that they have in their portfolio, pretty much all of those are going to own the same things. When we look at these alternative investments, it's a massive world. There's not a lot of transparency on what these mutual funds are actually buying, especially in the case of different options or derivative-based type investment strategies. So we want to be careful of how this plays into our risk tolerance. Another concern I would have is just the scalability of these. There's $1 trillion plus inside of these 401k plans. That's a lot of money that's going to be potentially rushing into these alternative investments. A lot of these managers, as they see this influx of money, they're going to be looking at their plan B or plan C ideas, not necessarily going with their A-list ideas, because they're going to want to get this money invested for you. So you might start to see these portfolios start to have a little bit more risk inside of them than they traditionally would see. Now, again, I think the bottom line is this is a great thing from a diversification standpoint in your 401k plans. That being said, we do need to take a step back, review your risk tolerance, review your financial plan, your tax plan, see how these are going to fit into the portfolio, and see the plan options that are available to you. Now, these may not be available yet, but it's a great time to start to dig under the hood, see what's available in your current plan, compare that to alternatives outside of the plan, and see if there's a way we can improve the overall portfolio structure that, again, aligns with that plan that we've created for you, as well as the risk tolerance. If you don't know where to get started with that, I encourage you to reach out to us, schedule a complimentary meeting. We can start to dig into your options that you have and start to continue this conversation of where alternative investments might be able to fit.